All right, let's look at a trade review here of ticker symbol HES. This is HES Corporation. Um, so it came up on the scanners yesterday, and we can see yesterday was a very volatile day for it. A lot of range, big downward movement, and popped up on the scanners, began looking at it, and was intrigued immediately simply because of how well it bounced at this 50 SMA. And yes, it did break through it. It actually opened above it and then just completely rejected and got back down below it. So it does meet the initial criteria for our trades, and this was a river to valley setup. And at that point, now all I had to do was look for support and resistance to see if there was true reason to be interested in taking the trade. And the first thing that I noticed was, and it's very minor. I'm going to zoom in. I'll zoom back out in just a minute to show you one more thing. But this area right in here was pretty solid. Right there, we can see creating the high there, testing it again. We can see even though price was, eventually broke right here, you can see how it reacted to this level. I mean, it didn't just blow through it. It kind of bounced around and proved that this level had some strength. Now, we also had right here, which was what really kind of caught my attention, was that little bit of a gap fill. You can see again, there's our signal day. So we had it filled. It didn't completely close the gap, but it did fill the gap in as far as the wick and the range goes of that candle. And it bounced right there, and it got really close to that area and bounced. But what really kind of was the icing on the cake here was, look at this trend line. If we were to draw it in straight up through there, you can see how important this trend line was. For quite a while, it was a major trend line. Then if we zoom in, we see we bounced pretty much right at it. I know there's a lot of lines there, so I'm going to delete these. So we bounced pretty much right at that trend line, as well as that gap fill. So we had those two levels of resistance plus the 50 SMA. So we had some pretty strong technically based reasons to think that this was going to continue down and that price was going to want to move down. So I did feel comfortable with adding this one to the watch list yesterday. And as long as we got triggered, I was happy with taking a trade on it. And that's what happened today. Now, we can see that price opened right there. And if you've been trading with us at Armor Trading Systems for any amount of time, or you've taken my Income Genesis course, you know that everything stays the same, even on gaps. The only difference is that we do not enter until the gap is filled. So on this trade, we were looking for, if price were to open today, in this area, we would have been looking for a break of 108.67, which means I would have needed to see, 108.66 print up here. Now, in the case of the gap, because we gapped down here, what I needed to see was price print 108.67. I needed to see it completely fill that gap all the way up to our trigger. And if it does, then I'm going to feel pretty comfortable taking that trade. Especially on a trade like this let me zoom in even more. When we look at it, you can kind of see as far as the relative size of these candles, from the open all the way up here, excuse me, that's a pretty decent range that it already had to move just to get triggered. And once it did, I felt really confident that even if it did push higher, it would have been a small loser. I didn't think it would, max us out and get our max loss on this one. If it did happen to push higher, I wasn't too worried about the size of the loss, simply by looking at the relative size of these recent candles. However, after a push up, I did feel comfortable that with that area of, it's the previous day's low, so now that area becomes resistance as well. And that also being our trigger, that it would continue lower or would reverse and move lower. That was the thesis. That was the hypothesis for this trade, was that after the gap, it needs to push up, and if it gets to our trigger price of 108.67, we will enter on the short side. And it did do that, and we'll look at more details in the 1 minute in just a second. So as far as exit strategies go, the first one that we'll go over, as always, is the exiting or begin scaling out at previous resistance levels or support levels. In this case, we're going for support as it's moving down into support, places that we might expect it to bounce. So after price pushed all the way up and got triggered, when it began coming back down, where would be the first place to exit? And if you're trading that way, for me, it was right there too. You can see we had this gap up. It would have been to fill that gap right around that 107 area, right in that range, right around 107. That would have been the first area that you could have either exited completely or just began scaling out, exit most of your position and then move your stop so that you don't turn a winner into a loser. And that's also, think about that. That's the trigger was 108.67, and the first area for potential exit was 107. That's $1.67 that you could have gotten. And yes, obviously it did happen. And that was just the first level. For me, the second level would have been around there, and that's close enough. If you look over here, you can see the price where I'm at. 104.76. You could even say just 105 even. I'm not sure if it got down to it. Yeah, it did. It got down to 104.98 was the low on the day. So, and that was just me just glancing at that. That I was saying 105, and that 105 area would have been a good spot. And then past that, there's really not much unless we look way left, but we're not going to do that for this one. And you could have, that would have been, if it got down to there, that's a home run. That's a massive trade. But it didn't happen, which is perfectly fine. This still was a beautiful trade. We can see the close on the day is up here is at 105.94. Our entry 108.67. So almost 3 points could have got out of this trade. If you timed it perfectly, like I just said, with exiting at the 105 mark, then you could have got, $3.67 potentially, or in that range. Would have been a really, really good trade. But so to recap on that one, right there, and all it is, if you're the type of trader where you're wanting to exit into resistance or begin scaling out into resistance, all you have to do is look left on the daily chart. Look left and find these areas that are key levels. Like this one right here, this was after a gap. So obviously, if you know anything about gaps, the majority, I'm not sure the exact percentage, but the majority of all gaps want to be filled. And they do get filled. So that would have been a really good spot to take profit. Even though, yes, I know the gap of this day kind of interferes with that, but we're just saying from our trigger price back down to that level, we know that was a key area. And then right here, this was just an area where we had 1, 2, 3 candles right here. It liked being around that or hitting around that 105 area and bouncing. And that's all it is just looking left. The other option, another exit strategy would be to, again, after it triggers, you enter the trade and you set your stop and you hold it for the majority or all of the day. And it's a great way to catch some really big home run trades where you get some big runners. You will, from time to time, allow a winner to become a loser. However, if it does start moving with you really well, then you can begin moving your stop so that you either, if you lose, it's a small loss, or you can even move it so that you'll still make money even if you get stopped out. This one would have worked out great on that. This would have been where we can look at, our trigger 108.67 and look at the close 105.94. And we can say that, yeah, doing that trade, you could have gotten about 3 points out of it, a little less than 3 points, more realistically because of the spread and slippage, maybe. Let's just say 2.5. That's still a good trade. Still a really good trade to get 2.5 points out of this. And that would have worked out absolutely perfectly. Now, if you're scalping, let's look at the 1 minute. Remember, our entry was at 108.67. 108.67. When exactly did it happen here? The high? Nope, it happened right here at 9:43. You would have gotten in, and basically immediately after getting in, a few minutes after getting in, you would have been up about a point. Not quite a point, but almost like 97 cents. Would have been a really good trade to get the 97 cents out of that. Would have been fantastic if you had held. It did eventually go against you, or go against us only. What is that? 68, no. Yeah, 70 cents roughly. And then from that point, it just came straight down and was really, really beautiful. So even if you're scalping, if you're the kind of trader who you like the fast trades, you like being in and out as quickly as possible, I wouldn't recommend, getting out too soon, because then that means that if it goes against you on a quick mover like this was, if it were to push up against you by 30 or 40 cents and your position size is wrong, it could really hurt you. And you could, panic, freak out, and exit based on emotion rather than based on a technically based reason to exit the trade. So on this one, again, it triggered right there, 9:43. Really, in the next minute, it had a low of 108.16. So you could have got 50 cents within the next minute, and then it just kept getting more and more from there over the next few minutes before going against you just a little bit. Either way, no matter what your exit strategy was, this is one of those trades that worked out quite well, from a scalping standpoint to holding it for the majority of the day and moving your stop as the day goes along, all the way to scaling out at previous areas of support or resistance. Really good trade. Really happy with how this turned out. And this is a prime example of multiple areas of support or resistance that may not be super obvious at first, but multiple areas of support or resistance combined with that 50 SMA, it created the perfect storm, perfect technically based storm for us to create the hypothesis and believe that price would continue lower. So that about wraps it up for this video. Again, thank you for watching. Please like, share, and subscribe to this video, and God bless.